buying a new home, whether it be your first home or a trade up. I'm Bill Gross. I'm a real estate broker in Los Angeles. My colleague is,
Yeah. Patricia Castillo,
and you're with what company?
eXp Realty.
What do you do?
Sell real estate in Southern California.
And our other colleague is
Gustavo Segura, mortgage broker here locally as well.
fantastic. And we were just talking about interest rates because really we'd also talk about life than interest rates, right? So I was suggesting, I see some conflicting information, some suggesting rates going down, but one of my favorite analysts is Mark Fleming at First American, saying that he thought rates would go up the first half of the year, and Gustavo was sharing some important information. So Gustavo, where rates headed next year, and why? Why do you believe that?
Yeah, so the big key driver, we always hear the Fed raising the Fed fund rate, right? And for the last, I don't know, 4 or 5 months, it's going up, 75 basis points. So because of that, we've always associated, I think consumers associated that with the mortgage rates going up. And it has been going up, but it's been going up because of inflation has been going up as well. Ever since like around mid-year of 2022, it's just been kind of getting out of control and it kept going up and up. So then, rates just went. So everything was perfect in that everybody was going up. Now, inflation has turned the corner back in October, November, and it started to come down. So even though the Fed is raising the Fed fund rate, they raised it in November, December, and we're probably going to get a little bit here at the end of January. Rates are probably going to continue to come down because inflation is under control and it's coming down and down. And I share this with Patricia, where the annual CPI takes a look at the last 12 months worth of monthly consumer price index. So then when we are taking a 12 months look at it, every time we get a new month, we drop one of the months from the back end, right? So the last December, I think it was like a 0.6 CPI monthly. So then as long as this December data is lower than that, then inflation is going to be lower. In January, it was, let me take a look at what January 22 was. It was a 0.6. In February, it was 0.8. In March, it was 1.2. So each month, those are pretty big numbers that if we can control the inflation right now, in January, starting December, January, February, and March, we get lower numbers. Inflation should come down, and then everybody's going to like that, including the mortgage rates. Even though the Fed, they may be raising the Fed fund rate, it's still not going to correlate with the mortgage rates.
All that sounds good, but who knows?
Yes. The other thing too is like there's so many variables. You have the war, you have the market, you have storms, right? They affect local economies. You have the job strength, right? Everybody's saying, well, we're not in a recession because job strength is so strong right now. But that could change, and then that's why the stock market is sort of being a little bit careful, because they're saying, well, if we are expecting to go into recession, that means people are going to be unemployed. So that's why that could cause some issues with mortgages. So everybody's still going a little bit careful at this, but I do think that inflation will continue to come down the next 3 or 4 months, and then we're going to see those rates following as well.
So I'd like to share with you guys a chart I came across on the subject, very similar to what you're saying in some regards, Gustavo. So this is 30-year mortgage rates, which are on this side of the chart, plotted against the 10-year Treasury yield monthly average on this side. And so generally, as the 10-year, which is the government's cost of borrowing money, goes up, so do mortgages. Not exactly. Mortgages are more expensive because treasuries are with a full faith in government, backing of the government. Mortgages are kind of government backed, very complicated. But the difference you can see on this chart has held mostly over time, and that's the center line. And you can see the last few months in red are unusually on the outside of the boundary. Most are right on the line, and these are higher. This suggests that mortgage rates are higher than the treasury by more than usual, or the premium that a mortgage gets charged versus the regular interest rate is higher than normal. Now that could be, as Gustavo says, could be because the treasury bills are going to go up, and then that will put these more in line, right? If treasuries go up here, that mortgage rate is right on spot. It could be that they're too high because some people say mortgage companies don't have enough capital because of the restrictions and a lot of complicated issues as to why. And so there's a temporary phenomenon, and even if the US rates stay the same, the mortgages would otherwise come down. So there's some of that kind of question is, are we baked in to go down already, which is kind of what Gustavo was saying, or is there some aberration, is there some unusual statistic? I don't know.
Yeah.
And the thing I always try to tell people is, I always say, I don't have a crystal ball. Actually, I do have a crystal ball. It's right there. You can see it, but it
Not
doesn't tell
that
you,
one.
it doesn't work.
Yeah.
I buy on Amazon. It doesn't tell me where the future rates are going to be. I ask all the time. Maybe they got a mirror on the wall. Who's got the best interest rates of them all? And Gustavo's picture would pop up, I guess. But
Yeah.
we don't know. And there's so, as Gustavo says, so many different factors.
Yeah.
And the key is right now. I do think, though, you can play the odds now to your advantage. So as a buyer, what are a couple of things you should be doing today to get the best rate? One is, we've talked about over and over again, preparing, getting your credit cleaned up, getting yourself pre-qualified for the right amount, getting your documents. Gustavo, in the past, you also talked about in the past buy downs, both temporary buy downs, where maybe the first year it's bought down by 2%, second year by 1%, and long-term buy downs, buying down the interest rate over time. What else should a buyer, or what else can a buyer do to maybe lower their interest rates or their costs? Or what can you do to help them take advantage if rates go down again?
So I mean, down payment is another thing too, right? But it's expensive. So even if you're getting a house at $500,000 and you want to put down the 3 or the 3.5%, that's going to be great to get in, right? But if you can get into that 5% or 10% area, that's where the lenders are going to see that a little bit more, a little bit less risky. So then that's where they'll give you a little bit better rate. And of course, combined with your good credit, all those other elements, then you're going to have a better rate on there as well. So that's something else that if you do have the ability to, and that could be through gift funds, that could be your family helping you out, parents, relatives. So that could be something that you're getting that in order to make sure that you get that house. So, wedding gifts, we talk about that as well. So there's a lot of different ways where first-time home buyers are being able to come up with this money to help them get into that home.
Yeah, one thing that we were talking about, because we're still going through so many different clients that came through the open house that I had recently, and in talking to them, one of the main concern is the down payment and the rate. So a lot of people that I've talked to, it's also about their mindset. Them thinking that they're basically priced out completely and that this is not attainable at all. So once I start talking to the home buyers, I let them know what their options are. And as we've been talking about it on this call, all the things that you just mentioned. But the other thing that I brought up to Gustavo the other day was, how about combining the down payment assistance for the people that qualify? Along with that, because those programs, they are basically loaning you the down payment. That's like a second loan on the property. So once you close escrow, you have two loans. You have the primary, which is what you use to finance a purchase, and also the second loan, which would be your down payment assistance loan that you're not really making payments on until the first one is paid. But in combining the down payment assistance, you can get those funds available to you to purchase, along with us negotiating on your behalf for the seller to contribute towards your closing costs. And those funds can be used towards your closing costs or buying down that rate, because with the down payment assistance, the rates are higher since the lenders are basically loaning you those funds up front, and it's considered a little risky. The rates are higher. They could be somewhere maybe 7-8%. So in that sense, the closing costs can be used to buy down that rate or used towards your closing costs, of course. So you can get that 2-in-1, the down payment assistance and the rate buy down with the closing cost credit from the seller. So there's, another creative way to basically leverage this market in the buyer's favor. So there's different options. And I also, advise clients to look at different insurance companies when they're looking to purchase a home, because some companies may beat out other companies. I personally have State Farm. I had a client that I referred to State Farm, and Farmers ended up beating their rate. So you never know. There are some companies that are more aggressively pricing their policies. So that's another thing, is homeowners insurance.
Well, sometimes it's also not just the lower price, but knowing what coverage you need and don't need to keep the cost down is also part of it. And also part of it's packaging it with your car insurance. Sometimes the best place to always check is where's your car insurance, because you put both together, you're going to save some money most commonly, I think.
Mm-hmm. Yeah, bundling, of course, is going to save you as well.
Bundling, that's what Flo says on Progressive. Was that a commercial for
bundle your products?
It makes sense. Now we've been with USAA. My family's from a military family, and once you get into USAA, you can pass it down, and the rates are unbelievable once you're in. And in the past, I didn't always check with them. Every time we have insurance with them, so we always look for new insurance. We check with them. It's always cheap, a good deal. But I think that's because we're with them already. If you're already with State Farm or Farmers, make sure if you're adding an additional insurance, you have cars, at least get a quote for your home insurance for your current policy for sure.
Right.
So I heard something the other day also I wanted to run by you. I couldn't wait to ask you today was PMI. Somebody who's a longtime lender told me recently that the marginal cost for PMI has come down dramatically in the last couple of years. Is that true?
Yeah, and there's big lenders that will have a lot more room to negotiate that and to get better coverage on that on their side, right? So I do have some big lenders on the wholesale side that when we look at their PMI, it's $100, $130, it's $150, depending on the loan size, of course, but it is very attainable now on the conventional side. And that could be a difference of $100, $150 through a regular retail lender. So when we're looking at keeping and maximizing your budget for the house and being able to take $100 from one side of the equation and move it over to your house payment, that's great, So yes, the cost of it has definitely come down. And of course, a lot of the bigger wholesale lenders or lenders will have that, and that's a great benefit as well. And I see that between wholesale lenders as well. I'll see one that maybe it's $200 and the other one is $130, $125. So definitely a benefit.
And which one's better, the 125 or the 200?
125. Lower is always better.
Just checking.
Yes.
Hey, we got somebody coming in, Tim Violet from Santa Clarita and all of SoCal. He's asking, is the California Forgivable Loan Program still available for 2023? Is it funded for this year? I'm not familiar with what he's talking about.
I think that's the 10% equity forgiveness program. So last I was trying to work with someone to get that. They were out. They basically were, they finished out the funds for that. And the way that worked is you needed to meet a certain income level for the county. So like in LA, like Riverside, some of those areas, it was like, 70,000 household. And then you were able to get up to 10% of that purchase home price. And then every year up to the 5 years, they were forgiving 20% of that loan. So after 5 years, you didn't have to pay it back. So
from my understanding, those requirements to qualify were pretty tight. Like if you didn't fit right into that criteria, you didn't qualify. So it was really hard to qualify for that program. Yeah,
like the income was like $70,000. Where the down payment assistance programs are like $180,000 for Los Angeles County. So it's a big difference. It's more for lower income, and when you have that limitation, then the home price is also going to be affected, right? So if you're going to be having 70,000 or 65,000 income, are you going to be able to get $350,000, $400,000 home? But then when you go out and you start looking and you don't find those homes, then it's a catch-22 almost.
Yeah, it's tough. Those government programs are so often just so politicians take pictures, a lot of happy people, and a lot of
Mhm.
social media.
It's attention grabbing.
Attention grabbing. I know there was years I was the only approved lender, I think I still am, in the city of Santa Monica for the TORCA program, which was the tenant occupied rental conversion program, where if you they took an apartment building and made it into condos,
Mhm.
and they had special loans for people who wanted to buy who were residents. But I was back when I was a lender for about 10 years, I did one, and I was the only one who ever did one. And so I'm sure it was a big program, announced it, and they got a lot of publicity for it. So some of these government programs, though, are a lot more hyped than they are reality. But that said, it's worth checking out. So
It is. Yeah, it definitely is. And it's, it's a great program, but then it's also what's happening in the market. What are you going to be able to afford with that, So
right.
mhm.
Very good. Ivan Oberon, welcome to our call. It's been a long time since I've seen you, man.
Yeah, Bill, how are you?
About 3 or 4 years, I think.
Well, I mean, sometime early last year, we poked around a little bit, but I keep getting your first time home buyer program invites. So I decided to poke in here as I had a few minutes and see what was going on.
Nice. And you're in the valley, or where are you located?
Well, I work primarily out of my Camarillo office. Our corporate HQ is in Irvine.
Got it. Nice.
Oh, down by my side.
Yeah. And then of course service all over Southern California, but I'm lending in 48 states.
So are you a direct lender, Ivan, or broker?
Yeah, I'm a combination of the two. So I'm a direct lender, but I also broker through my company any non-QM product, hard money, fix and flip, DSCR construction, multifamily, just all the creative stuff as well. And then of course, like many of you guys, all the traditional stuff, FHA, VA, jumbo, super jumbo.
Mhm.
So we don't like to say no. So we keep looking for stuff to bring on board.
Did you have any, just curious, did you have any successful borrowers closing with the forgivable equity builder loan we were just discussing?
No, because anybody that asked for it, it was the same type of thing they asked because the city or somebody does some marketing in a general area, and none of them were able to meet the maximum income requirements.
Right.
And that's part of the problem with most areas in California, especially, is you need a certain amount of income to even qualify from a debt to income standpoint for some of these programs. But that income that you need to qualify is actually more than the median income required for that particular area to qualify for that loan. So it's not something I promote. I don't promote down payment assistance programs. I don't promote FHA, even though I do all that kind of stuff. I typically tend to stay away from promoting it because I find that when you promote it, you attract borrowers that have income and down payment challenges and credit challenges, and those aren't the clients that I prefer to work with. So, but certainly when it comes up, or like there's a multifamily option where they want to live in it as an owner occupied residence, and I don't have a private money program that could be as well suited as an FHA for multifamily, then I'll do that. But yeah, to answer your question, no, I haven't closed any of those, even though I did have a couple of requests for it, but they couldn't qualify.
Yeah.
Cool.
It's like dangling a carrot, right? And you're
Mhm.
just constantly chasing it, trying to see who's going to fit that exact mold.
Well, yeah, I mean, a lot of these things are designed to get the phones to ring, right? And then through that, you just weed it out and see what happens.
Right.
Cool.
Yeah, or try to offer another product. But if there's,
Mhm.
when there's challenges with credit and down payment, even income, then it does make it more challenging. And it's like the pipeline gets slimmer and slimmer and slimmer.
Mhm. Which
Weeding out.
lenders are you guys with?
Well,
So
I'm a real
we
estate
work with-
broker. I'm with EXP Realty, as is
Yeah.
Patricia.
I know you, Bill.
Yeah. So
Patricia's my
yes,
team.
I'm a real estate agent as well. And Gustavo, he's a lender based out of Orange County, or a
Okay.
broker, I should say, working with several different lenders.
Oh, cool.
He's
Right
behind
on.
the orange curtain.
What's that?
He's behind the orange curtain.
Yeah. Awesome. Well, how have these been going for you, Bill? Because you've been doing these for a good while now.
Yeah, we
We have
have
fun. I don't know. We have fun. No, Patricia and Gustavo's been on with us almost every week. Though Patricia's missed a couple, but when she was gone, it was pretty miserable. But other than that, We've had a lot of fun, right, Gustavo?
We cover each other, sir.
Oh, that's what it is. That's right.
Yes.
Oh, that's right. Okay, good. Have fun. Look, I think at the end of the day, I do this because I enjoy it. And I obviously want to get the word out to as many people as possible. You see it. I mean, somebody's watching what we're doing.
Sure.
I think that in our industry right now, real estate agents every day say to me, I'm frustrated because I so-and-so sold a house without me that was somebody else. Somebody else so bought a house without me. And I always ask, well, did you let them know you're a realtor and you let them know what you specialize in?
Sure.
Quite frankly, I don't work with a lot of home buyers. I work with a lot of agents that work with home buyers like Patricia. And I have customers looking to buy houses I want to support. But I enjoy this as a way to educate and to help my team and help Patricia. And Gustavo's been a good friend and support us along the way. So I'm glad to support it. But the truth is, if you really want to get down to it, I enjoy this call. If I
He
didn't,
just
I wouldn't
likes
be here.
being on the, he just likes the airtime.
Yeah.
Exactly.
Well, I mean, you're promoting it, so I'm wondering are you getting more agents on here, or are you getting more consumers on here?
The thing about, I find marketing like an event like this is 90% of the people that you're inviting that don't show.
Mhm.
Like the fact that you got the invite, whether you come or not, says you're paying attention to me at some level. Yes,
Sure.
of course, people show up, and Patricia's had some customers who come on here, and I think she's done real well. And this has probably been one of the factors contributing to it.
Mm.
And I don't think we know that, because when you put on YouTube and Facebook, you get so many views for it multiplies your time. Like in my
Sure.
case,
Views while you snooze.
for each hour I spend on video, I get about 10 hours of watch time.
Mhm.
So I don't know who's watching it, but I do know that all the time I get people like yesterday call me and say, I was referred to you. How? I don't know. I saw a YouTube channel. Somebody said to check it out. And so there's a certain accumulation that as long as my business is good and it's real good, I haven't been too scientific about it, but I do a lot. I mean, I'm on video. Literally today I was on some Zoom call or other, it's 5:21, probably about 6 hours today on some call or other.
Mhm.
And I encourage my agents to do the same. And people I support like Gustavo, the more people you talk to, the more you can help. The more people you help, the more
Sure.
money you make. That's just how it works.
Sure.
I see you out there too, Ivan. What are you doing? What are you working on these days to promote your business? And you have a pretty good team behind you as well. What do you have going on that supports them?
Yeah. I mean, it's mostly me putting stuff out, but I have a great team internally that helps with videos and photos and different things. But I just get on social media almost every day. I put something out, obviously through email, I meet and phone calls. I mean, if you're not doing phone calls, not really none of the other stuff works. The other stuff is ancillary to your calls.
Yep.
Because it's all about that connection.
Yeah.
So, but
Yeah.
I always like connecting with other people just to see how we can support each other. And Gustavo, I'd be happy to have an offline conversation too, just to see, where there might be overlaps or where there might be things that maybe you can cover that I can't, or I can cover that you can't, just depending on how diverse and broad your office is.
Yeah.
But there's always things that we can support each other in.
I think it'd be good for you guys to get together. I like both of you guys. I think it'd be nice to see you get together. Worlds collide, Marvel and what's the other one?
DC. Oh,
DC Comics get together.
Yeah.
Whoa, mind blown.
Yes.
Okay. What else we
That's
got
great.
going?
Well, it's gonna be a great year. So, and it takes good relationships and partnerships supporting each other in order to make it even better.
Yeah, I'm excited about this year.
Mhm.
It's going to be a great year. And, a lot of professionals that I've been communicating with and just connecting with, I think it's just has to do with your mindset. And in the beginning, whatever you're doing, whatever goals you're setting out, whether it's buying a home, whether it's selling one, even connecting with other agents or professionals like you guys on the call.
Yeah.
People are attracted by the energy that you put out. And so, I choose to be positive every day and just look at challenges as opportunities, because there's always an opportunity, even in a crisis.
Sure.
So, just like in 2008, we had the mortgage crisis and felt like all hell was breaking loose in the real estate market and the economy. But look at all the agents that were making it with the REOs and all the foreclosure sales, right? Those were booming. So that was the opportunity to gain there. So it's always, a good thing to just keep learning and adding those tools to your tool belt.
Right. That's right.
because you're always going to be able to help somebody in some way. It's just having those conversations every day and being in front of as many people as possible.
Yeah, that's one of the exact conversations I had at one of my Berkshire Hathaway branches of having agents think about, like, every time we come into a market like this, and we're coming into what was considered to be a down market, a recession, all this kind of stuff, like more wealth transfer happens during these times than any other time. And so
Right.
we just have to be more intentional about educating their clients, and also thinking about, hey, look, if you're going to be completely on the sideline, because some people are not going to be able to get off the sideline, but you have all this money, you saved up this stuff, why don't we put your money into an investment property that's going to give you cash, and then still create an opportunity there. If they're saying, hey, I'm going to wait a few years, well, why don't we put that money to work anyway? You've already saved up the money, you can get into an investment property, even out of state, and put that money to work. And now you become the trusted advisor. You take advantage of an opportunity, then they thank you because you got them into real estate at the right time. Because it's always a good time to buy real estate. It just depends on how you go about it and who you're partnering with in order to find
Strategize. Yeah, absolutely. Yeah, I think this is going to be a good year. But like you said, being intentional about everything that you're doing in your business and in relationships.
I think being intentional is so critical right now. I know, Patricia, you heard me talk about what Grant Cardone said. I had really 3 rules for this market, which I think are right on. One is being more disciplined about your business. And I think, all of us I had tremendous success the last few years, and that's allowed some sloppiness to fit in. And I'm a pretty disciplined person. I'm pretty systematized. And I have to admit, if I'm going to be honest, that I've allowed a few sloppy habits to get in my business that I caught myself on. I got lucky that it didn't cost me a deal here recently. And number one. Number two, he said, know the new rules of the market. I think the market's different than it was 2 years ago. You have to do the things that work now, not the things that worked 2 years ago. And the third was cut out whatever isn't working for you now. And I think being more productive and efficient. And so those are challenges for all of us. But I have to, I'm off to a great start. I have a great pipeline and got some really good business leads going on right now and a new listing. So, but I've been working hard consistently for the last couple of months.
I'm sure your team has grown too.
Team's grown as a result, and Patricia's done fantastic and done some business with Gustavo, and so it's not for anything other than we've done this consistently now for, I don't know how long it's been, Patricia, about a year or so at least.
This workshop, it's been a year.
And most people can't do that, and it's been tough. And there are times that you have
and
to guess whatever
Wednesday.
But we've been at it, and we still get feedback. I see comments all the time on your Facebook and my YouTube and such. So you just got to keep at it, keep pushing, and adjusting and trying to prove things every day. So
I take it.
There's always new things that will come onto the market as far as maybe promotions with financing, different, like we're seeing right now, a lot of seller concessions. So that's how buyers can leverage today's market. And those are things that buyers wouldn't really know because they're not seeing the offers that we're seeing. They're not making offers that we're writing up. So that's why we have this workshop. So we can also let them know, this market today is different than what we saw halfway through the year last year. It's completely different. So they can basically leverage this market to their benefit.
That's right. Well, the reality is you turn it into the positive, because right now is the best time to buy for buyers than it has been actually for the last 3 years. And the change in the interest rate environment has actually created a less competitive marketplace for them. It's created sellers that are more motivated actually to negotiate and to talk, like you were saying, and through a lot of creative strategies. I mean, you got to disclose a loan that their first year's payments are going to be based off of a 3.25% interest rate for the first year, right? So it's like, okay, we just went back in time a year, year and a half. And then what we're, second year, 4.25%, third year, 5.25%. So, but the idea is that we're going to refinance them anyway into a lower fixed rate within the next 2 years. So that really helps bring buyers into a situation where they're getting some help from the sellers, and we're focused on payment, right? We always have to be focused on payment, not necessarily rate. If somebody's always going to cut your rate, they're going to do different things. It's about the creative strategies that we can use and selling what they're comfortable with, not necessarily what the guaranteed rates and loan depots of America, they're advertising
Right.
not down rates just to get the same thing, just to get the phones to ring, right?
Wow.
And then sometimes they can't get a loan done.
Yeah.
So we have a question from one of Patricia's viewers watching on YouTube, from Tim again, is what are the experts saying about interest rates for 2023? So again, I have a crystal ball right there. Right there.
Not that darn ball again.
Yeah, it doesn't work, but I have a crystal ball. But Gustavo and Ivan, you guys are in the lending business. You guys are responsible to know the future as far as interest rates. Just
Right.
kidding.
Yeah.
Gustavo, I think you talked a little bit, but give us a hardcore prediction. Where do you think interest rate? We're going to put this on the internet and hold you to it. No. Best guess. Where are rates going to be? Let's say March 31st, 2023, and where do you think they'll be December 31st, 2023? If you're going to predict.
Well, I do think they will continue to go down. As I mentioned, the inflation numbers, January, February, and March are pretty big numbers for last year. So as we get new numbers, that will change inflation downward. But I do think that once we get into the middle of the year where we have inflation a little bit more under control, it's always going to be harder then to bring it down from there, right? So maybe the second half of the year, the rate may not be going down as fast, meaning it's going to stay around whatever it ends up being in June, and it kind of finishes out, because it's kind of like losing weight, right? You can lose some of that weight a lot faster, but then once you're trying to lose those last 10 pounds or 5 pounds, it's a lot harder. So it's going to be one of those things that
as bad as losing weight. Is that what you're telling me?
once we get inflation down, a little bit closer to 5%, and then under that, it's going to be a lot harder for that to come down. But I do think that we're going to have the rates coming down closer to 5, and then they probably could break 5. We'll see where they land on.
Okay, now you sound like a politician. March 31st, 2023. What's the interest rate going to be? What's your projection?
I think we're going to be a little bit above 5.
5 point.
Yeah. 5.2.
And December 31st, 2023.
I think we may just be around there still, 5%. I think, like I said, it's going to be harder to come down. Right now, it's going to be a sharper downfall, and then it's going to be just kind of hovering around there.
Okay, Ivan, where's going to be your best projection? This is on the internet now, so the whole world's going to see it. We're going to hold you to it.
We're going to put your cell phone number on the screen.
Right, do it.
Wow.
Do it.
Mark, and if it's not, you can get a refund for all your mortgage payments from Ivan for the next 30 years. Ivan, what's your best projection for March 31st?
I agree with Gustavo in the sense that the inflation has definitely been falling, right? And that's something whether the Feds want to admit that or not. But to take a little bit further introspective look, is that one of the things that we watch most closely is the 10-year yield, and currently is at about 3.7%. So if that yield remains between 3 and 3.21 and let's say 4.25, it should, as long as the economy stays strong. And then the other things that we need to look at is unemployment. So if the jobless claims rise to beyond 323,000. Then that yield could drop to maybe 2.7, 2.73, and really the projection for the year, as far as I'm concerned, and I did a little market update, which is why I kind of have these numbers still floating around in here, is maybe a yield of 3.21 to 4.25, and if that happens, then the rates for the year will fluctuate between, like what Gustavo said, maybe 5.25 and 7.25. I don't think the rates are going to go down and consistently keep going down and stay down. I think we are going to see some fluctuation still. But once we're watching the unemployment and that 10-year yield, I think that's the range that we're going to be playing with for the rest of this year.
Okay, so March 31st, 2023, your best guess rate will be what?
5.5.
And December 31st?
Yeah, that's I'm not projecting that far out. And
oh, come on.
we might have another thunderstorm. It could knock down a power grid. Who knows?
Exactly. Pick a number.
Like
Come
the
on.
old saying, time will tell.
This is just for fun.
Yeah, I mean, by the end of the year, let's just say that's I don't know, maybe are we in election year yet?
No.
in the low 6s. Okay. I don't think that the rates we're not going to see below 5% this year, without buy downs, of course, but just standard base rates. I don't think we're going to go below 5%.
Okay. Well, look, this program is free, and the advice we're giving is not even worth that price. So, Patricia, your best guess, mortgage rates on March 31st, 2023 will be?
After everything I've been reading, and like the guys were saying with inflation coming down, I think they're gonna be somewhere in the fives, and
5
of
point-
course, yeah, somewhere in the mid fives.
5.5,
Yeah, I would say somewhere in the mid fives.
December 31st, best projection.
I'm gonna say probably higher fives, maybe 5.75.
5.75.
But I know that, obviously the rates are affecting buyers from getting into properties right now, coming off the sidelines. Also, some sellers are thinking if they're going to sell right now, they're going to have to get out of their current mortgage, which may have a lower interest rate, and they don't want to go into a new purchase at a 6 or 7% interest rate. So I think once the rates start to settle more, we're going to see more activity as into maybe the ending of the first quarter or beginning of the second quarter.
Okay. Well, I'll say this. I don't normally believe in projections because I really believe in the market changing every day. But if I was pressed to put out something, I would say I think rates would be about the same, 6.15 March, and probably about the same by the end of the year, 6.15. I think they could be higher or lower, but I don't know what the future holds. But I appreciate you guys going on the record, and it's always fun to get some projections. So thanks so much. Okay, last comments. We're a little over time here, so let's wrap up here. Hold on a second. What percentage of loans involve rate buy downs right now? Gustavo, what percentage of your loan closings include either a temporary or full buy down?
I would say it's actually less than 50%.
Isn't that interesting?
Yeah.
Isn't that interesting?
Yeah.
I find that Ivan, what percentage of your loans are including either a temporary buy down or extra points to buy down a long-term rate?
Well, I've been doing a whole lot of non-QM and investor loans lately, but my traditional purchase loans, we've been doing a heck of a lot of promotion and talking with our listing agents and our buyers agents. So I'd say more than 50% of just the traditional purchase loans are involving some kind of negotiation for a buy down from the seller, even if it's just a straight permanent buy down, but certainly at least a 2-1 buy down.
Wow.
That cost is, depending on the loan size, is reasonable for a lot of sellers to cover.
That's good to hear. I mean, I think it makes sense for a lot more people that are using it, but it doesn't seem to be as popular with the buyer. And I feel like I have to kind of sell them a little bit on it, or work with the buyer's agent to sell them or educate them on it, but challenging. Okay, good. Thank you for the input, guys. Thank you, Ivan, for popping in. Great to see you as always.
Yeah,
participating. We do it every Wednesday at 5 p.m. Gustavo, always great to have you here and participate. Thank you for your help.
Thank you.
Ivan, if somebody want to reach you, how will they get a hold of you?
805-236-2647, and you can look me up on social media, Ivan Oberon.
Fantastic. And Gustavo, as always, how do we get a hold of you if you want more information?
714-334-4563. And yep, there I am.
Sedera Home Loans. So thanks for being on as always. We love having you.
Yeah, thank you.
And Miss Patricia Castillo, somebody get a hold of you. How would they do that? You're
Yes,
on the IG and all that social media stuff. How would somebody
on the
reach you?
IG, on the YouTube. The best way to reach me would be my cell phone, which is 323-365-9909. And I appreciate everybody for watching today. And Gustavo and Ivan, thank you for being on the call today.
Thank you,
guys. And lastly, I'm Bill Gross. I'm on the social media at Bill Gross EXP. We do this every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern. We also live stream it onto Facebook, YouTube, LinkedIn, other sources as well. If you want a copy of this or any questions, reach out to me, Patricia, or Gustavo or Ivan. Thank you everybody for being on the call today. Have a great week.
Bye.
Bye.
Thank you, guys.